GKFX Prime presents the Market Analysis Webinar.
Hello traders and welcome back. Yes, it's another weekly analysis video. We've got a new month. It is August, typically the quieter holiday period. My name is Dima. Welcome once again to another trading week where I help you by breaking down some analysis of charts and potential opportunities for this week. So let's get going. I have another few charts for you this week as always. And I'm going to remind you once again, I mentioned it last week, we have the quieter period time. We've got a new month, especially this week, beginning and beginning of the months are periods where you want to be a bit more careful with your trading. Market can get a little bit unpredictable. And as well as that, this week, first week of the month, NFP week, Friday will be NFP news, non-farm payroll as usual. So we'll be watching out for that. So let's get going here. I'm going to start as with the previous weeks to have a quick note here on the news. So we know where to be careful of, where to look out for potential volatility and for the markets to begin making their moves. We've got the main news Tuesday. The Australian dollar could be affected because of the rate announcement from Australia. That could affect the Aussie dollar. On Wednesday, we've got slightly less important news, I should say, on the Swiss franc, the CPI numbers. And on Thursday, we've got major news on the pound from the UK. The bank rate will be announced. And on Friday, again, Aussie news, monetary policy statement, CAD news. So we've got employment numbers there, perhaps less important in the bigger scheme of this week. But of course, the main news as ever, the beginning of the month, non-farm payroll numbers on the dollar. From the US, so we're going to have to really pay attention to it this week, especially given the setups that we're looking for this week, and you will shortly see why. Okay, let's get going. What have we got this week? Right, so I've got a little mixed bunch, a little bit different from last week. Let's see where we're at. I'm gonna start with the euro dollar to begin with, and you can see that last week we've had a wick left to the downside. We've had a bullish week that ended bullish here with a slight wick to the upside as well. So a little bit of rejection to end the week. Looking down on the daily, we've got this line here of previous resistance, and also if I mark out this gap where the market could retrace to, where the market moved away from very heavily and usually tends to come back to that. So we've got this very big, very long range, many days of range here, and the first target I'll be looking at is the high of that range, which is not very far away, only about 65 pips, and then further up will be this zone right here. So let me look down here into the 4 hour. What I'm looking at here is this move. We had this move off and retracement. We created a new high and we retraced, and now it looks like we are heading back up again. So what I would expect as terms of the high probability setup is for the market not to breach this low and go higher. Now, when it does make its move higher, I'll look for a possible retracement, and that could be a bit of a higher probability setup into this zone where you can see the bodies of the candles, and then that continuation to the upside. Obviously, this doesn't look like a big move at the moment because we've got this range. There's a little bit of uncertainty in euro dollar because of this ranging market, but the slightly more probable scenario at this moment in time, unless something changes beginning of the week, is this small move to the upside, and then we'll see what happens from there, because at that point when we get into this zone, we're going to be deep in the retracement of the higher time frame of this whole move, which is now retracing, and then we'll have to see where the market wants to head to from there. So that's what I'm looking at on euro dollar for the moment. Now let me move on to another major pair. Let's go to dollar CAD. Dollar CAD, you can see here that from this reference point here, a swing high which jumps out to this low, we've had this retracement. Again, we had this long kind of ranging movement, the market broke out and now coming back down. You can see as well on the monthly, we've had this very big rejection wick to the upside, closed very bearish. So I would look for this month to continue that bearishness. On the weekly, you can see broke previous week's low. And if you look on the daily, broke previous significant lows right here. And in fact, from the previous week, I did mark out this zone. We went through it and rejected it. So we also have this level here that I also marked out for the market to reach to, and indeed we have gone into that level right here. So we've made it here, and the next point I'll be looking at is this one right here, which would be a deeper retracement of this entire move. So again, if you don't remember, let me just draw this fib here, and I'll be looking at this kind of below the 61.8 to 78 level. We've also got this gap right here in price. You can see the market moved right up, didn't retrace, it moved right away, which what happens is the market tends to come back and revisit these zones. So that's another reason why this is a zone that I'm interested in for the market to come back to. Looking on the 4-hour, it's a little bit messy, but we are creating lower lows and lower highs, and I'd look for that break lower and then possible better price to continue downwards. If I see the market heading straight down, then obviously it won't give me won't give us a chance to enter here. So this is the higher probability setup as it stands. Let's see how the price action plays out by the end of Monday. And that's the dollar CAD. Okay, next, let's go to the minor pairs. We're going to do another CAD pair. We've got Aussie CAD here. Again, I'm going to zoom out on Aussie CAD. And you can see on the weekly here, we may have a potential swing here. However, looking on the bigger picture, we've created a new low here. We've created a area here, a zone, where if the market is indeed in a retracement phase, we could see a rejection of this level. Now, if I go down into the lower time frame, again, I could take the obvious high to the low, and we have reached that 61.8 retracement. Now the question is this the end of the retracement, or are we going to head higher? Now, I don't know that. We're going to see how the market wants to react. If I look on the lower time frame, I can see that the market has broken structures, broken these lows with this very long, sharp movement to the downside. And if it continues that way, then I would expect that the higher probability scenario would be to break this low right here, and then retrace and continue to this level down here. If you want, I can draw it out for you a little bit more of an obvious, zone. We've got multiple touch points where the market has been moving off of. Now, should we have a very clear and sharp break above this high, then that would invalidate the setup, because then the market would indicate that it wants to move higher rather than the end of the retracement that I am expecting, or I should say seen here as a possibility in Aussie CAD, and that's not confirmed yet, just yet. I do like this low, and if it does break higher, then obviously that would be invalidated, but if it does break lower, further confirmation, and then we going possibly lower still. So that is where the high probability at the moment stands, and I favor that short setup right here. Not the cleanest, I would say. It would have been very nice to get a very bearish candle. This candle you can see here last day on the end of the week, Friday, took out both sides and really cleaned out the market on the buy side and the sell side. You can see ended up as a doji here. So this would have been very confusing moment for a lot of traders. And now the question is, where is it going to go from here? So the safer option would be to see that push to the downside. At the moment we're here in this retracement, we don't know what's going to happen. And when I see a confirmation to the downside with very strong momentum type candles like this bearish candle, that will be a good confirmation. So that's the Aussie CAD. Let me go into another Aussie pair. I've got Aussie Swiss for this week. Right, again, I'm going to start on the weekly, and what I can see here is that although we broke these structures here, if I draw a zone right here for you, you can see that it rejected off there and then headed lower very, very sharply, indicating that this is a possible high and the market will continue lower. I've also got these lows right here, which I like the look of because they represent a point of liquidity and for the market to reach to. So it's not quite matching, but they are fairly even on a higher time frame. So I would expect a push down into this level and possibly beyond as a high probability scenario. Now, if this level gets taken out, then obviously this would not be the case anymore. The short side, the sell probability would fade, and the whole setup would now be invalidated because we would be going the opposite direction, and we've got new highs being created, structure highs being broken. With that, I can also see here a gap, another clear gap in the market where we moved away from. So possible retracement to there, and that will be a nice higher price to sell from to come down into the level mentioned here, 0.64. So that's another short on the Aussie, another bias to sell the Aussie. Remembering, of course, that we've got news twice during the week on Aussie, so we're going to see how that plays out, and that could be a catalyst. We could see that happening, market making some movement with those bits of news. So really the safer option, the high probability option, is just to see how the market wants to play out. In the moment it's a bit of an in-between phase, and when it does produce the price action that I'm looking for for this week at least, then it would be more interesting to see that play out. It'll be a bit riskier to do it beforehand or during the news. Safer option is to watch it play out. So that's another Aussie pair here. So yeah, we're going to be choosing out of the two. Got Aussie CAD, and in fact we've got another one here, Pound Aussie. And the issue here is that there's a conflict, because Pound Aussie I'm looking to short, and if I'm shorting Pound Aussie, then what you're looking at is a weak pound and a strong Aussie. However, in the previous two Aussie setups, we've got weakness or favored weakness in Aussie. So this wouldn't exactly match. You'd be really going against the grain here. So really want to bear that in mind. Let me look at the higher time frame. And looking at the higher time frame, I can see again these lows I can see a market which has failed to push higher. We've got these 2 wicks here, but again, we've moved lower and lower, and in fact, broke this low here. So I would look for the market to reach down into these lows. Looking at the lower time frame, again, mark this out as a gap for the market to reach to in the previous week, and indeed it has done that, and I wanted to short from there. We didn't reach there, but now we have, and now that we have reached this zone, that's when I'm going to actually be more interested and see what happens. So what I'm going to look at, well, I've got this significant high right here. If the market breaks that, then this whole idea of shorting pound Aussie will be invalidated, because that would be a break of a significant structure high, especially when, after seeing all this momentum down, I would like to see it continue. And you can see as a little clue here for you that the move down was very sharp. Yeah, there's a lot of momentum, a lot of force behind it. And you can see that in the price action in these bearish candles. But the retracement was very long-winded. It took a long time. It's just slowly creeping up. And that's a sign that there is weakness to the upside and the force is to the downside. Now, all that is left to do here is to watch for a rejection of this zone. I would like to see, in terms of higher probability, a break below this structure low. And then once the market does that, then I'll be more in favor of looking for a swing and then continuation to the downside after getting a good price. And that'll be a nice risk to reward. There's about 200 or so pips to go down into the target level, which is 1.716 or so. So that is the pound Aussie setup. And again, caution because of the conflict with the sell bias on the Aussie as a whole. Okay, probably by now you can see a pattern repeating here of way to look at the market and assessing which is the high probability and where the market wants to go. And then if it doesn't do that, then how you want to check yourself and see whether you want to get out or invalidate the setup. So again, the price action is king most of all, and paying attention to that. So that's what I'm doing here. Right, so I've looked at the euro, dollar CAD, the two Aussie pairs. We got the pound Aussie as well. And now I'm going to go to gold. Let's have a look at gold. I'm going to zoom out here. What you can see here is that if you were with me the previous week, I've got this trend line that I was talking about, which the market may bounce off from. Now on the weekly, that's a clear trend line. On the daily, it didn't match here, but we're going to look at that bounce as being significant. And now looking at the beginning of last week, I was looking at this zone as a sell scenario, and what happened? We didn't reach there. So there was no trade for me there. Didn't reach it, went shallow, did a shallow retracement, and then moved right away into the area that was expected right here. So that bounce was carried out. It happened. We broke these structures. Very clear to see the high here, the high here, and the high here. So obvious, more bullish intent in the market. Let me just remove these lines, clear up the chart for you. I want to make it nice and simple, nice and clear. So the first target was reached, second target was reached, and now we are in a deep retracement phase out of this whole movement right here. Now the question is, we've reached the 61 level, we've reached this zone. We're now moving towards the 78 level in the 1772 or so. I'm going to mark this out more accurately here, looking at this swing high right here, and obviously seeing this gap again where the market shifted away from, and possibly coming back to revisit that gap in the price action. As you can see, that's a repeating pattern, and I've just showed you that in the previous charts and in previous weeks as well. Now, a question is, what do we do from here? Have we reached the end of the retracement or have we not? Well, the situation here is we want to wait and see. And if it's not clear, then obviously it's not something that's higher probability, not something we want to trade, at least not for now. So the way I'm going to look at this is that I'm going to bear in mind that we're in a deep retracement and we have a possible rejection here from this zone that I'll be looking for the market to make, if it makes that, if it decides to do that. Now, previous week was very bullish, so I would expect the continuation of that bullishness and to see what happens from there. I've got this zone here marked up as well, so we may head even higher into this zone right here. We're going to have to see how it plays out. Now, we have got weakness from previous week on the dollar, so I wouldn't be surprised to see bullishness on gold. And also by this price action as well. So let's continue and see. Right here, if we get a push higher, if I look on the lower time frames, I would like to see a nice retracement into possibly this zone, looking at this swing to be kept in check, this low at 1750. And if it does that, then perhaps that'll be a nice high probability, cheaper price to go long into the expected area where we may see a reversal from. However, it's higher risk because we're trading a smaller time frame. We're trading the, what I perceive to be at the moment at least, as a possible retracement before a reaction to the downside. So small, short, and high risk trade. Otherwise, waiting for the daily chart, waiting for the possible reversal, and we may not get the reversal. We may get a very strong push up and continued push up until Friday, which is NFP again. Big news, NFP likely to affect gold as well as the other dollar pairs or dollar based pairs. Okay, so that's gold. Let's see what happens there. Not my favorite for this week, I have to say. Let's see how it plays out, unless we get some clear price action. And lastly, again, we end up with Bitcoin. Let's look at last week. Last week we ended up bullish, didn't we? Market did push higher, did a reversal in the middle of the week. And what I was looking at as a high probability setup for the market to come lower, as you can see I marked out here before the push higher, we in fact had a much deeper retracement, no clear bullish price action. And then we had this, you can see this big candle. That's where the market really showed its intention. And we had a much deeper pullback than expected. So now let me delete all the previous week's markings. And let me go back into the weekly again. I marked out this zone several weeks before as a possible place the market will retrace to, and now we're heading towards that. We're seeing that is happening at the moment. So I'm going to stick with that bias and look at the daily. I see that we haven't reached that level yet, and there's a gap in price right here, as you can see, and possibly the market to reach higher into that, which is the 28,000 level. Looking at lower time frames. Again, if this is indeed the case, there's a little hint here that you could see previous week's high was broken the week before last. So last week we had a slightly higher high than the week before that. Another hint there. So now I would like to see a better price, nice deep retracement to get a better price, and that would be a possible zone to buy from. Again, if this low gets taken out here, I'll be more careful we may reach an even lower zone, this gap right here, before the continuation higher. But again, price action will determine where the market wants to react from, just like it did last week, where we had this very bullish push right here and no real strong bullishness before that. That's what I see as the higher probability scenario. May also get a very direct push higher with no retracement, and then, well, so be it. The other option in that case, perhaps riskier because you'd be entering at a higher price, would be the break, again, the pullback, and a continuation. So we would have this zone level right here, and then the low, this new next significant low point would be right here as a reference point. If that's the case, if that happens, we'll see again on Monday. May want to have just sit out Monday. You know, there's no harm in sitting out the first day of the week, seeing how things play out. It's also the first day of the month. Remember, it's not only Monday; it's also the 1st of August. So let's see how it plays out, and that will be the safer option to see what the market does before actually engaging with it. Rather than anticipating, we're just going to react and respond to what the market wants to do. So that's Bitcoin. Also Bitcoin, again, I think I mentioned this last week, Bitcoin price in dollars. So weakness on the dollar would also add credence, add credibility to the fact that Bitcoin likely pushing a little bit higher, higher still. If you want, what we can also do is take this whole swing right here from the high and go to the low. I can go to the daily to do that. It'll be a bit clearer. I think I've already done this. We see what we haven't even reached the 50% retracement yet. So that also gives a little bit of an argument that we're not at the end of the retracement. Many times price reacts off the 50, and then the better price, higher probability scenario is the 61.8 Fibonacci. And yeah, we're still, I mean, how much are we now? We are off by quite a bit, $3,700 away, and then an even further double that distance into the 61.8. So yeah, still a bit of a way to go, which indicates that there could be a bit more of a push to the upside here. Okay, so those are the 7 charts for this week. The others, I didn't feel that they were very high probability, to be honest with you. And yeah, this is what I'm seeing in the market right now. Trade with caution, once again. Remember, we have the Aussie news, we have pound news as well. So pound news will be relevant to the pound Aussie setup. We've got NFP, of course, that will be relevant for a lot of the market, Bitcoin, gold, dollar CAD, euro dollar. And we've also got Swiss news, actually. So Swiss news might coincide together with the Aussie news on the Aussie Swiss pair. So do bear in mind, what I do is I like to mark out the news ahead of time. And then once the news happens, I reassess and see if the market is in line with what I'm looking at. And if it's still responding, if it's still in line, the price action is showing the direction, showing the movement that I planned already in trading plan, then I'll look to engage. Otherwise, remember, go for the high probability setups, manage your risk as always, and pick your setups carefully, follow your process, and yeah, risk management is number one as a trader. So hope that's helped you. Hope that's been useful. Comment down below if you have any questions or want to share your setups and charts. And I will see you on the next week's video. As always, we'll have some more setups and more opportunities. Don't have any fear of missing out if you missed this week as well, because there's always another bus coming along, and the markets are still here. Okay, talk to you soon. Thank you as always. My name is Dima, and hope you got some value from this video. Thanks again, and I will see you next week. Bye for now.